please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Here with Power Breakfast. Let's get down to a couple of important earnings that came in after market hours on Friday. Now, Wipro came out with a weak set of numbers for the third quarter. Revenue was the key disappointment. Didn't quite meet expectations. Very, very flat. Actually, no growth if you're looking at the dollar-denominated value. Kritika Saxena is here with the fine print.
Well, it's not been a good quarter for Wipro. If you look at the top line, they had guided for a growth of anywhere between 0 to 2%. So yes, they have come in line, bang in line with the lower end of their guidance. So their revenues in dollar terms have been absolutely flat. But Street was hoping for it to be in the mid-range, at least 1%. But let's not crib for that 1% odd. As far as their other parameters are concerned, in constant currency terms, yes, they have come in line with what the expectation was at 0.9% of a growth. Now, margins is what we need to look at, because margins have come in at 14.8%. Now, in reported terms, that's a 250 basis point of a decline. Now, the reason why they have seen an impact on margins is because one of their clients declared insolvency, and as a result of that, they took a provision, a one-time provision of $49.7 million, which led to a 2.5% hit on margins. So if you remove that on an adjusted basis, the margins actually come in at 17.2%, and that's just down by about 10 basis points, exactly in line with what was expected, and that's largely because of wage hikes, currency impact, etc. Now, guidance again is key. They have guided for a growth of 1 to 3%, not as stellar as what some analysts were expecting given the performance in this quarter, but more or less in line with some expectations. Digital services have crossed about 25%, so that's important. But if you look at the geography growth, they have seen America be fairly muted. America has been under pressure, so that is important that it is down just 0.7%. APAC and emerging markets are under pressure, down by about 0.5%, but Europe continues to outperform at 4.7%. Vertical-wise, energy is the big blip over here. Energy is down by about 6.1%, but healthcare has picked up and BFSI has picked up. So both those points are important. They have also completed their share buyback, so that's something that the Street can take some heart from. But yes, all in all, not a great quarter. Some areas of improvement, but the pressure continues on Wipro.
All right, now that we've heard Kritika detail the Wipro numbers, let's also hear out about what the management had to say about these numbers, and more importantly, what is their outlook going forward.
I'm still confident that, in Q4 we should be able to exit on a quarter-on-quarter basis with industry matching growth rates, because we do believe that the transformation that we are undergoing at Wipro for some of the company-specific aspects, all the heavy lifting has been done, and I feel very optimistic, whether it is on mining, whether it is on localization, whether it is on digital deals, whether it is on some of the consulting business that we have focused on.
Overall, I think we have managed the operational rhythm quite well of the business. We had 0.5% reduction in margin on account of adverse movement in Forex, but we we nearly made that up with 17.2% of operational gains that we got from the company. So overall, I see a strong operational rhythm going forward too, and we will keep our margins in a narrow band as we have done in past.
All right, that was Wipro. We will find out the market's reaction to those numbers today. But now let's talk about the big story and the big deal, which has finally gone through. It's done. ONGC has agreed to acquire the government's entire 51.11% stake in HPCL. Now, this transaction is going to fetch the government about 37,000 crore rupees. That's how much ONGC will have to pay. It's an all-cash deal expected to close by the end of this month, which means the money comes in. So good for the government, good for fiscal deficit. Is it a good deal for ONGC? What happens next? Well, let's put those questions to Varinder Bansal. Good morning, Varinder. Now, you were telling us about the different scenarios. I want to first talk about the price. This 473, this kind of premium that they're paying, was it seen? Was it expected on the street? What do you think of it?
Well, when the deal was announced, or when the intent was announced, the price of HPCL was around 470, 480. Now, all these stocks, OMC stocks have corrected because the crude has moved up. Right. Okay, then that is why you can say there's a premium of 10-12%. But honestly, if you talk to a lot of analysts, the the premium what is coming is not as much as people on the street were expecting. They were expecting at least 500 rupees. Let me take you through the deal first, okay? As you rightly said that the ONGC will acquire government stake. The contours of the deal are very important. There is no open offer. There is no delisting of HPCL. HPCL will be a different entity altogether. This is an off-market transaction, so you will not see any block deal which will happen. Right. And HPCL share going to that 474 mark because of that block deal on the exchanges. Okay, who wins in this case? Clearly the government. Why? The divestment target, which was around 72,000 crores, they have surpassed it very handsomely, now at 92,000 crores. Fiscal deficit, which was a worrying sign, is contained. Bond yields will rise, of course. So all this put together, the government is winning. What for ONGC shareholders? Well, the most important thing was the value leakage, which everyone was wondering. Because remember, in between there were reports that there could be 60-70% premium as well, okay, which is not happening right now. So ONGC, even if they take the entire 37,000 crore of debt, this will be EPS accretive by anywhere between 5 to 6% for FY19, and thankfully crude is also helping ONGC. So ONGC is also a good thing. No unnecessary premium. Just imagine ONGC, which generates ROC of nearly 10%, is getting an asset which is having an ROC of 25%. So it's always good for ONGC. What for HPCL shareholders? Clearly, some of the bulls for HPCL will be disappointed as no open offer, no delisting. The premium is okay, but not as what they expected. What ahead is the important thing. What happens to the HPCL MRPL merger? It's not only ONGC and HPCL you got to watch out for, but also watch out for MRPL. Because I remember Mr. Surana of HPCL clearly telling that HPCL MRPL merger should also happen before this deal happening goes through. So I'll be watching out for details on that. Importantly, will ONGC sell any stake in IOC or GAIL? GAIL has been falling down since last few days. If that OFS or stake sale is not coming, you could see some, some buying happening in IOC or GAIL. Also, IOC Oil India, that will be deal which will happen in FY19, mark my words, because clearly, that is something now which is the writing on the wall. Giving all this consideration, one thing is very clear: government should not idly tinker with any capital gain tax, because one thing what has saved them in FY18 is only divestment, which is via stock markets.
All right, thanks a lot for that, Varinder. Pertinent points that you've raised out there, whether ONGC will sell the stake to fund it or not. But tell you what, congratulations, because you've been on top of this, Varinder. The day the government reduced its borrowing limit was the one you sussed the fact that maybe this merger could happen in this fiscal itself. But let's go ahead and hear a word from the ONGC management itself on how they will fund this deal and more. That is the key question.
To an independent for valuation, we had engaged EY. Then we had transaction advisors also. There are different ways that I'm sure you know better than me. I mean, there are different ways of making a valuation for a company. So they have gone through all those numbers, and the number which they recommended and the price which you have offered is well within that the numbers which are recommended by your consultant as well as by the transaction advisors. In our group company, we have MRPL as well in the downstream. Then with HPCL coming in our fold, if you look at the marketing capacity today, they market about 35.2 million tons of refined products. And their refinery capacity, if you take, it's about 17, 18, excluding that Batinda. And MRPL we have 15. So if you add it up, 35 vis-a-vis 32, 33. So very well fit into that. So we can very well leverage this marketing network which is readily available with HPCL. No, as of now the approval is they'll remain as a independent entity. Independent when I say that will remain a subsidiary of ONGC, but they'll maintain that HPCL, CPAC entity will maintain.
Now on Friday post markets, big boy Reliance posted a strong set of numbers in the third quarter. So let's move on to Naveen. He's here with the key highlights. Naveen, what did you make of these numbers? Good?
So if I were to put it, it's like a Geo Reliance. It's
Geo
kind
Reliance.
of that kind of numbers. So I'll begin with the two big highlights, Mangalam. So begin with the EBIT margins on Petchem. That was the biggest highlight. Remember, the expectations were lower given the fact that the realizations were falling, but that has come in bang in line. In fact, better. On the other hand, Jio also for the first time delivered profit at the PAT level. So these are the key two highlights. So breaking down the numbers at the console level, revenue not much of significance, but still up 9% on a quarter-on-quarter basis in line with estimates. But the margins have been at 17.6%. Remember, the highest estimate on the street was not more than 16.5. So that has come in as a big surprise. On the other hand, PAT is also up 16% at the console level. Now, going segmental wise, as I told you, the biggest surprise coming from the petrochemical segment. Petrochemical margins have come in at 16%, 17.1% versus 17.7%. Again, over here, we weren't expecting more than 16%. So what has changed for the petrochemical segment of the company? Remember, the increased capacity in the higher realization product, that is paraxylene, that has been clearly showing in their numbers, and the company has been moving from naphtha towards paraxylene, and that has been clearly showing. So that is one positive. On the other hand, Jio, as I clearly pointed out, they posted a EBITDA of 2,600 crore rupees, while a PAT of 504 crore versus a loss of 276. This is clearly because of the higher operational leverage that has been kicking in, given the fact that the overall usage base has been increased to 160 million users. So that is also one key positive. On the refining segment, GRMs are bang in line with what the street was expecting, $11.6 per barrel versus $12 per barrel quarter on quarter. That is also bang in line. The other services like digital, that is the retail segment, over there also the EBIT has been doing really well. Overall consolidated, strong set of numbers. Back to you.
Okay, all right. Thanks very much for that, Naveen. So good show from Reliance coming through. And of course, the disclaimer that Reliance Industries, of course, owns and operates the companies that run the channel that you are watching. On that note, let's move on to yet another good set of numbers. It was Jubilant FoodWorks. It was all about pizza on Friday. Stellar quarter. Some very, very strong growth numbers in terms of the same store sales growth performance. And now we've had the whole weekend when brokerages have had the time to go through the details and come out with their notes. What are they saying? Do they want more pizza, Manglam?
They want more pizza, and they're recommending their clients to get more pizza. And by getting more pizza, it's the stock and not the product itself. But tell you what, a large part of this is something that we were sussing out as soon as the numbers came in. The earnings, they beat estimates. The SSSG margins, highest level since the second and third quarter of FY13. The big question was, what led to this beat? And that answer was pretty evident in the earnings call, where Pratik Pota said that the same-store sales growth has been led by frequency of orders and not pricing, which is a big positive because more people are ordering more frequently as against the same-store sales growth increasing by more expensive pizzas. And that is something which is a heartening sign. Before going into the numbers, most of the brokerages were bullish with an EPS target of close to 31 rupees for FY19. Now, this quarter, they did an EPS of 10 rupees. So if that run rate was to continue, we would have to see a lot of EPS upgrades. And that is what came by. CLSA raised their target by 21 to 28%. We had Credit Suisse who've raised their target by 21 to 27%. Deutsche Bank too has raised their earnings target by 14 and 15%. So the consensus EPS has now moved from 30 rupees to about 42 rupees. So that's the kind of re-rating that we've seen. And all of these brokerages have increased their target prices from 2,000 to 2,600 is what Macquarie did, 2,200 to 2,500 is what Jefferies did. CLSA has the highest target price, 2,800. So let's see, the opening should be in the green, but remember the stock was rallying on Friday. Yeah. Whether those traders will book some profits at the high level or not is the key question. But the opening definitely should be in the green.
Okay, stellar number and some pretty lofty targets out there. Well, Manglam, one more company from the entire universe that you track, and now we're talking about the biggie, Asian Paints. I'm just going to go back to what Kansai did. I mean, not to compare, but the fact that that was a bit of a disappointment on the EBITDA. So what are we expecting from Asian Paints?
We are expecting some bit of disappointment on the EBITDA, but remember, Kansai, the disappointment was a little more also because Kansai was the big outperformer from the paint sector. The paint sector, Kansai moved about, 68% in the last 12 months as against Asian Paints, which moved just about 23%. On a longer term, of course, Asian Paints has done much, much better because of its size, and that's why it gets the premium that it does. Volume growth, that will be the most important thing. We'll be watching out for a favorable base. But the margins, as you said, because crude up 23% year on year, 19% quarter on quarter. We're expecting a revenue growth of 16.6%. Remember, this is ex-excise. So 4,589 crore on the consolidated total income is what we're watching out for. EBITDA is likely to grow a tad bit lower from 16% growth on the top line. The EBITDA is likely to grow just about 14.5% and a 30 basis points cut in the margin. Why a 30 basis points cut? Because the company has gone into some sort of cost cutting, cost rationalization, maybe the product mix mix would limit the fall that we see on the EBITDA. But there is again a downside risk given concise number. The volume number we're working with is 11 to 12% because we have a favorable base of 3%. The company has taken a near 5 to 6% price hike. Let's see how those numbers stand by, because the stock has underperformed the paint sector, trades at lofty valuations, but it's a good quality stock. Let's see whether they surprise or not.
Okay, absolutely. So that's Asian Paints for you. Moving on to the banking universe, it's going to be all about Axis Bank today, which will be out with the third quarter earnings print. Abhishek is joining in to tell us what to expect. Good morning, Abhishek. So far, so good for banks. I mean, very steady, decent numbers from Yes Bank, IndusInd, HDFC Bank. Everyone's played as per script. Can we expect the same from Axis Bank?
Well, Subhi, good morning. The point is that Axis Bank is a corporate-heavy bank, and in that front, you know, stress in the balance sheet is already there. So we cannot say whether that result will be as good as what we saw with the retail-oriented lenders like Yes Bank or HDFC Bank or, you know, IndusInd Bank. Now, asset quality will be the focus on Axis Bank. The total watch list was at 7,150 crore. How that moves in will be seen very closely. Also, slippages from watch list will be seen closely. The management had guided that more than 60% of the watch list is expected to go into NPA, and we have already seen that happening. So further pain, how much that come will be seen very closely. But my focus will be on the non-watch list slippages. Now the non-watch list slippages below 2,000 crore will be positive. Anything beyond 2,000 crore will be negative. Now gross NPA, which was at 5.9% in the previous quarter, anything below 6% will be positive. Net interest margin, which was at 3.45%, anything above 3.5% will be positive. Remember that in this quarter they had also raised capital, so that should aid in your net interest margin expansion. Our polls suggest an NII growth of just 4% to 4,500 crore, while net profit to grow at 22%. Now this net profit optically looks very good in terms of 22%, but it is just at 706 crore versus the normal run rate of 1,800 to 2,000 crore. Back to you.
All right, Abhishek, thanks a lot for that. That was Abhishek on Axis Bank with a new look.
It's time to talk commodities. We've got Manisha Gupta joining in with an update of everything that's happening out there. Good morning, Manisha. So what's on your radar today? How's it looking?
Well, you know what, much of the cues really are coming in from the currency market, and the U.S. shutdown has pulled the U.S. dollar index slightly on the lower side of the kind of highs that it was trading in the previous week. But it is the U.S. 10-year yields which are on the higher side, and that seems to be really supporting. Having said that, the commodity markets will continue to take a view of that. That, of course, is broader fundamental. But when you look at the crude oil prices, on Sunday, there was this oil producers committee meeting, and they have talked about on how they are looking at output cuts beyond 2018. The U.S. drilling rigs, of course, that count has continued to decline. You also have seen the U.S. production come down. So all of these factors really have been supportive. Add to that the geopolitical concerns, because you have those Syria violence come back on surface, and that is also supporting the prices. So a strong opening is what you are seeing in the case of crude oil prices. It is good in case of gold as well, with the weakness in U.S. dollar, geopolitical concerns, U.S. political concerns. The gold prices as well are back to around 4-month highs.
All right, Manisha, thanks a lot for that. With that, let's shift focus to the futures and options space then. Remember, on Friday's trading session, markets were at record highs. Post that, we got the institutional number, and both the FIIs and the DIIs bought in cash market. But the ferocity of the up move, that scared a few pairs, because if you take a look at the Nifty Jan futures, we saw some short covering there. It shed about 63,000 shares, and the premium of two Nifty current spot prices has turned into 6.4 points versus an equal amount of a discount. In the stock future space, there was again a lot of short covering. The FIIs added about 5,000 longs and covered 10,500 shorts. So that was seen in a lot of the stock moves that we saw on Friday. In terms of the index options, the FIIs bought about 21,000 long calls and wrote about 20,000 short puts. So that means that they believe the upside is more and the downside is protected. There was heavy selling seen in the 10,900 put, 10,800 put, and short covering seen in the 10,800 call and the 11,000 call. The big question ahead of expiry, do we see the big mountain 11,000?
Okay, and as we're looking out for that, I've just got breaking news coming in on cnbc.com. It seems the Sunday night vote has not achieved much. It seems the stalemate is going to continue a third day. That's the US government still in shutdown mode. We're completely out of time. On that note,